I have studied over 1000 stocks in the stock market, and the upcoming 7 stocks are the hidden gems and will give you insane returns. The first stock is called BETR Home and Finance, ticker symbol BETR. This is one of the most misunderstood stocks in the stock market right now, and it's now down more than 50% from its all-time high. Here's a little teaser on how much this stock will likely surge within 3 years, and I will tell you right now why. The market thinks it's just one other mortgage lender, which is struggling with the high rates. But what really matters is that the CEO is buying stock, the company is buying stock, and smart money is in. And the numbers and data is backing that up. This is an AI infrastructure player that is valued as a bank. They have a secret weapon, which is their technology, which is basically the Amazon Web Services for mortgages. On top of that, they have an AI, which is called Bessie, that is handling 700,000 phone calls every quarter. She doesn't sleep, she doesn't take breaks, and she closes loans faster than humans can. This tech allows them to offer one-day mortgages, which is a superpower in the real estate market. And the beautiful thing is that BETR doesn't only sell mortgages to consumers, but they're also selling their technology to other banks. They just signed a partnership with the top 5 US personal finance app, and they got 50 million users, and that is basically 50 million potential customers with zero marketing cost. And this changes the economics for this business entirely. They are becoming the engine under the hood for the entire financial industry, and you can see that in their forecasted numbers. This is their EPS chart, and they're going from a negative $2 EPS to becoming profitable in the third quarter of 2026. This is a massive turnaround, and you can also see that in their forecasted revenue numbers. It's literally just going up and to the right. Now you might think that this company is trading at a massive price to sales ratio, but that's literally not the case. They're trading at a price to sales ratio of 3, even though they're growing their revenues at massive double digits for multiple years. As you can see over here, the company themselves and analysts are projecting that the company will grow for the first 2 years more than 65%, and in the year 2028 they're expected to grow their revenues 33%. These are massive numbers. If you're growing your revenues 33%, you definitely deserve a PE ratio between 40 and 60. That will mean that your investment today will increase between 444% and in a bullish scenario 716%. And this is within 3 years. I can hear you think now, there must be something wrong with this company to trade at these multiples. And it's definitely not their balance sheet, because they have $226 million in cash and it's only growing. And another massive potential tailwind is that as soon as Trump replaces the Fed chair Jerome Powell, you will see the interest rates drop very fast, which is a massive win for the housing market, and at the same time a massive win for a mortgage lender like BETR. The next stock is called TSSI, and this stock is riding the AI supercycle. And here's a glimpse of the returns that you will likely get over 3 years. And here's why. The world is drowning in demand for AI compute, but there is a massive deployment gap. Companies can buy chips, but they can't deploy them fast enough due to complexity. AI racks now consume 100 kilowatts of power, and you can't just plug these in. They are required engineering, thermal validation, and specialized plumbing. TSSI is the bridge between the silicon factory, Nvidia, and the data center. And they recently made a strategic pivot, which makes this a new company. They have evolved from a low margin reseller to a high margin system integrator. So their business is right now more profitable. But the reason why the stock price of this company dropped more than 70% from its all-time highs is because the low quality revenue dropped 49% in Q3 2025. But what people overlooked is that the high quality system integrator revenue increased 20%. And because of this shift, they're expecting much higher EPS numbers than previously forecasted, and that will benefit the stock price a ton. Furthermore, they have a crown jewel. It's a new purpose-built factory in Texas with 15 megawatts of power capacity. And why it matters is because you cannot test modern AI clusters without massive power. And on top of that, they got a fortress balance sheet with $70 million in cash. And don't forget, this company is trading at a massive discount compared to growth peers. It's trading at a PE ratio of 43 and a price to sales ratio of 0.7. Next year, they're expecting to generate 340 million in revenues, which is a 38% increase from this year. And eventually in 2028, they're expecting a year-over-year revenue increase of 20% basically. Then this company will deserve at least a PE ratio between 25 and 40, and that will mean that the stock price will increase by 219% and 411% in less than 3 years. And that makes this stock so attractive right now. The third company is called USAR, which stands for USA Rare Earth. And here's the sneak peek in their potential upside in less than 3 years. This is possible because this company is sitting in the intersection of geology, technology, and geopolitics. It's literally the only company positioned to break the Chinese monopoly on the full spectrum of high-performance magnet materials. So the investment narrative is clear. They produce heavy rare earths like gallium and beryllium, no idea what they are, but they cannot be replicated elsewhere in the US. And the vertical integration integration captures maximum value and secures the supply chain. A $400 million cash pile allows for execution without immediate dilution, and the acceleration to 2028 production coincides with the forecasted widening of the global supply deficit. Now, if you compare the stock to MP Materials, one of the big things that stands out over here is that MP Materials already received government contracts and government support, and USAR, even though they're extremely important to the country, don't have government support, at least not yet. But if the government announces that they will be supporting this critical US company, then the stock price will go flying. Now, if we take a look at the analyst forecast, USAR trades right now at $13.17, and the crazy thing is the stock price has been dead for the last year. The stock price did increase a ton around mid-October, but is now back at very attractive valuations. So if you're gonna look at their numbers, right now they won't make any significant revenues. For 2026 they're expected to make 50 million, the year after that 150 million, and in 2028 they're expected to make $300 million. So as you can see, they're ramping up extremely fast, and they're expected to be profitable in 2028. Now, if you're growing with these percentages, you can definitely deserve a PE ratio between 70 and 90, and that will make sure the stock price will increase between 280% and 390%. The fourth stock is called Valens Semiconductor, ticker symbol VLN. This is a very interesting stock, with this massive number being their potential upside in 3 years, and this is possible because this company positions itself perfectly in the autonomous vehicle industry. So as vehicles evolve into autonomous supercomputers, the volume of data generated by sensors such as LiDAR or cameras for Tesla is exploding. Valens provides the nervous system, the high-speed, zero-latency connectivity that allows the vehicle brain to make life-saving decisions. Electric vehicles are constantly in hostile environments filled with electromagnetic interference, and Valens has a patent on signal processing technology, enabling error-free data transmission over low-cost, lighter-weight cables, and this technical advantage was validated in late 2025. The year 2025 was marked as the transition from concept to contract. Valens secured 3 landmark designs with major European original equipment manufacturers. These wins act as a seal of approval, paving the way for mass adoption. With a fortress balance sheet of 93 million and zero debt. And it has a massive addressable market, and it's right now trading at a valuation that has not priced in the steep revenue ramp expected from 2026 to 2029. If you're looking at the EPS chart, it's basically neutral because they still have to ramp their production. Their revenue is going up and to the right, making 15 million in Q3 2024 to projecting to make basically 20 million in Q3 2026. There are 4 analysts covering this stock, with the average price target of 150% increase and the most bullish price target at 240% increase within 12 months. So I'm not the only one that's bullish on the stock, but if you look at the stock price chart, it's not yet gaining a lot of attention, and that is the secret behind this company. This is the right moment to get in, because as soon as more investors discover this stock, you will be too late. Now, if we take a look at the forecasted revenue numbers for the coming 3 years, you can see that their revenue will really start to accelerate, going from a 20% increase in 2026 to a 40% increase, and after that a 37% increase. These are phenomenal numbers, reaching a first positive EPS year in 2028. Now, with these growth rates, a PE ratio between 50 and 70 is definitely reasonable, and that would make sure the stock price will increase by 738% and potentially 1074%. These are massive returns to generate within 3 years, but it is a $1.5 small cap stock that is pre-production, so it's definitely possible. The fifth stock is solving a massive waste problem in the world, and it's called ADURO. Here you see the potential upside within 5 years, so it will take a little bit longer, but then you will have a massive return. This is possible because the world has a massive problem. We're drowning in plastic waste, 400 million tons a year. Mechanical recycling has failed, only 9% is recycled. The solution everyone talks about is called pyrolysis, which is turning plastic waste into oil that is used for combustion engines. But it's flawed. It burns, it's too hot, it yields too little, and it makes dirty oil that refineries hate. So basically, the world needs a new chemistry, and ADURO Clean Technologies is bringing that to the world. And what they're offering is called hydrochemolytic technology. So ADURO isn't cooking plastic, they're chemically, surgically remodeling it. And the magic result is over 95% efficiency versus 70% for competitors, and that is pure profit margin. And the technology is real. Shell, the game changer, they didn't just participate. They're working with the French super major on the hardest to recycle plastics, and they got enough cash on hand. The pilot plant is commissioning right now, the demo plant in Europe next year. So ADURO sits in the sweet spot: environmental necessity and economic reality. They have the tech, the partners, and the cash. So ADURO is not just a recycling stock, it's a technology platform for the 21st century. Now the reason why investors got to be patient is because they will generate meaningful revenue and EPS numbers in 2029. But if you have the patience, in 2030 the EPS is projected to hit $5 with a year-over-year revenue increase of 120%. That allows you easily to give the company a PE ratio between 70 and 90, and that would result that your investment right now would increase by 2,800% and 3,700% within 5 years. But the first 3 years will be basically waiting. If you got time on your hands, which most of us have as long-term investors, then this company is trading right now pretty damn cheap, and a 30 to a 40x on my investment is what everyone wants basically. So definitely keep this stock on your radar. The next stock is called Lithium America Corp, ticker symbol LAC. Within 3 years, this could potentially be the return on your investment, and that is because this company is the cornerstone for the Western energy security. Thacker Pass is the name of one of their mines, and this has the largest known lithium reserves in North America. The scale of this company is so critical that the US government took a 5% ownership in this company and provided a $2.26 billion loan, which is signaling that this project is too big to fail and that it's crucial for American energy independence. Unlike speculative junior miners, LAC is fully funded. The Department of Energy loan covers the majority of construction costs at 0% interest rate. And on top of that, General Motors has invested $650 million to become the largest commercial partner. And this effectively removed market demand risk, and the mine life is projected at 85 years. This asset will supply lithium not just for the current generation of EVs, but for the next century of industrial applications. And remember, this is not a paper project. As of late 2025, 80% of engineering is complete and the workforce is already mobilizing. The first production is targeted for late 2027, which is timing the market perfectly for the expected supply deficit. On top of that, there's a policy tailwind. The Inflation Reduction Act provides as a massive tax credit that covers 10% of production costs. If you look at what the stock price did in the last year, it basically doubled, going from $2.7 to almost $5. But since the government announced their support for this company, the stock price declined more than 50% from its all-time highs. And it's offering you a very attractive entry point right now. They're basically expected to generate $10 to $20 million in revenue until 2027. But once that mine opens, they're expected to generate $770 million in revenues. And if we look until 2030, you can see that their revenue growth rates will eventually normalize to 10% year-over-year revenue growth. And if you're growing at those rates, you can demand a PE ratio between 20 and 25. And that will mean that the stock price will surge between 570% and 740% within 5 years. The seventh stock is called Knightscope, ticker symbol KSCP. This is the potential upside for the stock within 3 years, and the CEO thinks the same. He has bought a ton of shares the last 2 years, which is a very bullish signal, and this company stands at the beginning of a transformative shift in the global physical security market. As we approach the end of 2025, the company stands at a critical inflection point, transitioning from a high-burn research and development concept into a commercializing powerhouse. With recurring revenue momentum, federal validation, and a rapidly expanding client base, makes this stock extremely attractive. And analysts have the same opinion. The average price target has a 300% upside from current levels, and in the most bullish scenario, they're expecting a 560% increase in the stock price. And these are the reasons. Right now, there's chronic labor shortages in the security sector, and the increasing demand for social security creates a perfect storm for Knightscope robot adoption and demand. So what's important to understand is that the business model is right now shifting heavily towards high-margin, recurring revenue streams through their software subscriptions and full-service maintenance. And recent quarters have shown a massive uptake in renewals across casinos, universities, and other businesses, proving a stickiness of the platform. On top of that, they got federal validation, which is their mode, achieving authority to operate from the US federal government, which is a monumental milestone. This certification not only opens the door for massive federal contracts, but it also serves as an ultimate seal of approval for security-conscious clients like banks and data centers. And they will have new robots coming on the market every single year, which will be expanding their security business to paved parking lots, solar farms, and even borders. And we all know Trump loves his borders. This all sounds obviously amazing, but how are their forecasted numbers taking shape? For the years 2026 and 2027, we are expecting a 60% year-over-year revenue growth, and in 2028 reaching $55 34 million in revenues. But they won't have a positive EPS, so we have to look at the price to sales ratio. Right now it's trading at a price to sales ratio of 3, which shows how extremely cheap this stock is. Let's say worst case scenario, price to sales ratio with these growth rates stays at 3. The stock price will surge 200% in 3 years. But if they realize these growth rates, it will easily demand a price to sales ratio between 5 and 8. And that will mean that the stock price will surge between 400% and 680%, which is a massive return over 3 years. If you watched until this point, smash that like button, but only subscribe if you want to see more hidden gems in the stock market.